and welcome to the CNBC-TV18's Mumbai newsroom. I'm Sonal Bhutra and with me is Pavitra Parekh. You're watching Mutual Fund Corner. Hey Pavitra, good afternoon. A lot of things have happened in the markets. First is with respect to international funds. The tax collected at source for international remittances, that has been increased to 20% from 5%. So we'll discuss the impact of that. And secondly, we spoke about it earlier, international funds, a lot of them have stopped subscriptions to their funds as well. So what is the impact? How can one go ahead and talk about that? And a lot of chatter around ETFs. So we'll discuss that as well on the show.
So there's lots lined up clearly, and we have someone to take us through all of the many questions that we have today. We have Shalini Dhawan, co-founder and director at Plan Ahead Wealth Advisors, joining us now. Shalini, thanks a lot for being here today and for taking out the time for this show. You know, like Sonal was pointing out, I'll just start with international funds first, because we have seen some funds announcing that they will now be halting subscriptions in their international funds. We had Kotak do it, Edelweiss announced the same as well. Do you think that there is more to come, along these lines? And what really does it mean for investors who either want to invest in these international funds or already have perhaps investments in these funds?
Yes, so actually, since Feb of 22, mutual funds had been asked to, close subscriptions to their international schemes. And I think this was a industry-wide limit, actually, of $7 billion, which had got breached at that time. And because of that, a lot of these names that you mentioned and many more had actually closed subscriptions. So what we do find is that somewhere around September of last year, we did have some of them opening up as well. The limit that was set as per February 22 was the AUM of the scheme as on Feb 1, 2022. So if there was some headroom, or if there is some headroom today that the scheme has as compared to their AUM, depending on how the market of the index or the underlying index, that international index that they are following, and then if there is headroom, because of the market having dropped and so on, then the scheme would remain open. But yeah, we would find that many more schemes may close depending on the purchase and the subscriptions that are coming in, and depending on how the markets and the indices and the assets under those schemes are as compared to the February 1, 2022 AUM level in that scheme.
Okay,
so that would be expected.
Okay, so it is expected that there could be some more halting of subscriptions as far as international funds are concerned. So we'll take that in another question, what the next step is. But the other thing that has happened is the budget announcement on tax collected at source being increased to 20% versus 5% earlier. Does this impact international investing? What about investing via mutual funds in this case?
Yes, so it does impact investors who were using what is the LRS or the liberalized remittance scheme route. If there was an investor who was looking at, say, somewhere to keep his LRS or his remittance below the 7 lakh limit, because that was the threshold beyond which a 5% TCS was applicable, then now that investor finds that at any remittance that he or she does, there will be a TCS. So there is a merit for that kind of investor to probably look at other options, and that is somewhat like mutual funds, which we will talk about. If we were looking at someone who was an HNI and probably remitting somewhere in the range of 10-20 lakhs every year for international investments, then the 7 lakh earlier threshold had already been breached for such an investor, and he or she was used to the 20%, the 5% TCS, and then netting it off against other tax liabilities that the investor had. But now I think for the HNI investor, it would be more like a cash flow situation where they have to manage that and see how they can net it off against their other tax payments. But for an investor who was looking to avoid by keeping his remittance below a 7 lakh limit, that kind of investor actually needs to start looking at mutual funds, India mutual funds here, who will allow, sitting here, access to that investor for international investments. And, because that investment is made here in rupee terms and there is no LRS route that the investor is using, there would be no TCS. So that is one way to look at it.
Okay, that would be helpful. Shalini, we have been talking about this through our shows as well, that there's so much happening in global markets right now. We've seen that rally in the US markets, especially in the tech space. The entire China reopen story is playing out. What are the ways that investors can look at investing in these international stocks? And do you think it is a good time to be doing that as well?
Yeah, so there are two parts. One is, as investors who are sitting here in India, geographical diversification is also something that they need to look at. So therefore, the merit in looking at international investments, first of all. And then again, so there are many ways now that one can examine, a lot of Indian mutual fund houses to have ETFs, they do have index funds, they do have what are called fund of funds, and we can talk about that a little bit more. Specifically, is it a good time right now? I would say yes. If you look at PE valuation and valuation data of some of the developed markets and even emerging markets like China, what we're finding is that many of these markets are at their long-term averages, and therefore, from a risk-reward perspective for investors, it may be attractive to look at, investing in these markets. However, yeah, I mean, when you invest internationally, you should, do some homework. You should be aware that, many of these markets like the US have had their share of worries like inflation, recession concerns, etc. And that could mean volatility in your international investments, as we've seen in the last 1.5 years as well. So I think there is merit because of geographical diversification, because of valuation seeming reasonable in many markets internationally.
Okay, so of course, it is a good time to look at international markets, and the changes that we have seen so far as the tax side and the pausing of limits in international funds is concerned will impact investors in some way as well. Thank you so much for making sense of that, Shalini. But for now, we'll quickly slip into a short break, and on the other side, we'll talk about mutual funds versus ETFs. What is a better option? We'll get that conversation on the other side.
Come what may, with Apollo Tires, have a wonderful day.
Namaste, bete.
Auntie, we are missing you.
Nice. Look, Miss Amit.
On his way, I'm sure.
Sorry.
Forget sorry. Show us your gift.
It's right here. It's many birthday gifts in one birthday gift.
Ah, how is that?
LIC's Dhanrekha policy. Guaranteed benefits, money back, full payout on maturity, and premium payment only till half term. Then the missus can plan whatever she wishes. Jewelry shopping, house renovation, holiday.
For that, you'll come on time, na?
Guaranteed. LIC Dhanrekha. खुशियों का तोहफा.
अपने घर और कमर्शियल स्पेसेस को बनाइए अल्ट्रा मॉडर्न, इनोवेटिव, इको फ्रेंडली with quick installation. All this at the one-stop destination. Euro Pratik.
पापा ने अपने स्टार्टअप ड्रीम को रीस्टार्ट किया ताकि मैं ये सीख सकूं, सपना है तो पूरा करके दिखाओ।
करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ, अपने लिए, अपनों के लिए।
Hey guys, welcome back. You're still tuned into Mutual Fund Corner here on CNBC-TV18, and we still have with us Shalini Dhawan from Plan Ahead Wealth Advisors with us. We're now going to talk about ETFs and some of the trends that we're seeing in this space. Of course, we'll also go through, whether this is a good way to invest, what are some of the factors that you should consider. But first, Shalini, what is your sense on the kinds of trends that we're seeing in this space? There has been an outflow in the month of January as well. What do you think led to that? Is it just the FPI selling?
Well, all of us did read a lot about the FPI selling. There could be, many reasons. If you're talking about the India-based ETFs, then, one of the reasons we can say is there could be FPI selling, maybe reallocation to different geographies, China and other as well. Or there could also be some news around certain stocks which may have caused some amount of triggers of outflows as well. if you're talking about international ETFs or developed markets, then we also do have some amount of effect that the Fed commentary would have on US and other markets. So there could be a lot of reasons actually. I think it's difficult to guess.
Okay, but we'll have to see in February whether that trend continues or not, or whether it was a one-off because of all the FPI activity that we saw. But let's get to fundamentals now, Shalini, because when one investor is looking at investing in ETFs, what are some of the factors that should be kept in mind, and how does it really differ from mutual funds?
Right. So there are a couple of things that one has to look at carefully while investing in an ETF. The first item is what is called a tracking error. Now, tracking error simply, in simple terms, would be something that is a difference between the return that your ETF is giving you versus the return that your benchmark has given you. Now, as an investor, you're trying to invest in an ETF to make sure that you get the similar returns to the benchmark. So the lower the tracking error, the better it is, because that ensures that you're getting your investment objective. The second is that ETFs are largely a lot institutional market, so we have to be careful as investors. When we are doing ETF investing, illiquid ETFs are something that you do not want to be holding on to. You're probably better off looking at liquidity of some of the ETFs when you buy in, and some kind of a bid, what you call the bid ask spread is what is a technical term, but essentially differences between buying and selling prices. These would give you indications of whether your ETF that you're looking to invest in is liquid or not. The third is the AUM, or the assets under management of that ETF, also give you a good sense. If the ETF has got a lot of assets under management as compared to its peers, then you have a good sense that that AUM number would naturally mean a fair amount of liquidity to you when you do want to buy more or you want to move out and so on. So these would be the few items to look at.
Okay, those are some of the points that you can look at when you are considering ETFs. Shalini, what is the case for going for an ETF about, say, an index fund? What kind of benefit is there? I mean, I know this is based on investor preference personally, but what do you think is the case for picking an ETF over an index fund, or an index fund over an ETF?
Yeah, so usually, when investors are looking at ETFs, one of the things they're focusing on is the fact that, the expense ratio that they would be incurring on an ETF is a little lower than what they would incur on an index fund. So if you take a Nifty 50 ETF, or you take a Nifty index fund, as offered by any mutual fund, you'd find that obviously, there is a certain expense ratio for the ETF, and that's lower than the expense ratio for the index fund. So, if cost is something that's a big consideration for you, then obviously, you'd be tilted towards ETF. Now, again, if the investor is, generally preferring to have something very easy and simple, or even preferring to have, just kind of, once they have selected the scheme that this is the ETF or the index that I would like to add to my investment portfolio, then, just putting the money into a mutual fund is a better idea for that kind of an investor, because, they get professional management and the fund manager will take care of all the management of that money with the objective of the scheme as well. One advantage that we find on the mutual fund in the index fund route versus an ETF for an investor is the fact that, this whole concept of SIP, which has taken off very well in India, because of the discipline and the, the cutoff from emotional decision making every month, that should I invest, should I not invest, that SIP system actually allows, is working very smoothly with the mutual fund houses. And as far as the ETFs are concerned, because they are something that you need to do a lot of management, you need time, you need expertise to, manage your trading account, manage your demat account, manage the funding in that account to make investments on a regular basis, and so on. If you're an investor who wants a more, easy and simpler solution with an SIP system, then the mutual fund index fund would be something that you would prefer. If you're saying that, I have the time, I have the expertise, then probably, the ETF is what you would prefer.
Okay, so that is the case for investing in each of these categories. But at the end of the day, everyone looks at returns post-tax, right, Shalini? So can you tell us on taxation basis, does it differ or does it matter if you're going for ETF or a mutual fund?
Not as far as the Indian taxation system is concerned. So if you are holding a an ETF like a Nifty ETF, or if you're holding a Nifty index fund, short-term tax is at 15% and long-term is at 10% after you've held it for a year. So there's no big difference in that sense there, except for the earlier explained cost difference, which would be there. And if you were, because ETFs are of different kinds, so you could have asset classes like gold, which will have a gold ETF, or you could have, international ETFs. So sitting here in India, if you invested in a scheme which is investing internationally, then it's an international ETF in that sense. So there, the holding period for it to be long term would be 36 months, and then therefore the taxation on it would be 20% with indexation. And before 36 months, it's treated like a non-equity or a debt asset class, and then the incomes, the gains that you make from there would be added to your marginal tax slab.
Okay, we will come back to the gold ETFs that you just mentioned in a bit. But first, a question before that. In ETFs overall, there has been this persistent problem of price discovery, right? Whether you look at equity or debt or gold, there has been this issue because they're not as liquid. Is there a way that an investor can try to navigate this problem?
Yes, price discovery in all markets and even in ETFs would obviously be a demand-supply situation of all the market participants put together. So there are some efforts that mutual fund houses are doing now in terms of introducing authorized participants or market makers. Having said that, the ETF market is still broadly institutional. And there is the show already said that there is increasing interest which we are seeing from investors, both retail and HNI. But yeah, I mean, there is this you could look at items like we discussed, like your bid-ask spreads, or items like what is the AUM of the scheme. Like if you see one of the older ETFs that we have in India, which is the Nippon Nifty Bees, and if you see that for example, it has today assets worth 11,000 plus crores that it has in the scheme. Now that would give you an indication that it would be a fairly liquid ETF for you to invest in as an investor. So I think one of the things to look at for investors as they kind of dip their feet into ETF investing would be, how big is the scheme, what kind of assets does it manage, and that therefore, is it fairly liquid and so on.
Okay, interesting. Shalini, small cap investing, it is largely perceived to be high risk, and gold investing is considered low risk. So should people invest in gold through the mutual fund route or the ETF route? And for people who want to pure play invest in gold, should they choose a gold ETF or a gold fund? In January, we did see some declines in gold ETF, or at least the flows, so to say. Which way should an investor go about it?
So, from recent past data, it's interesting when we map, the way gold prices have been in the last couple of years. It's interesting to know that we can possibly now not really categorize it as a low risk kind of asset class for the kind of volatility that we've seen in, prices there. So yeah, I mean, difficult to categorize that. The merit that gold has in investing or in investor portfolios is that it has got negative correlation to some extent to equities, at least if you say Indian equities as well. So yeah, there is merit for, having that kind of, addition to the investment portfolio. Now coming to, again, the part of whether ETF, gold ETF and gold mutual fund and so on, again, a lot of the similar ideas would come into play. Are you very cost sensitive? Do you have the time and expertise to manage ETFs? Would you like to do that on a continuous basis, not just one time? Because sometimes we're doing monthly investments, sometimes they're just doing lump sum investments for, once a year. Maybe ETFs are easier because you're not really going to manage the trading account on a daily or a regular basis. But because ETFs are traded like common stocks or shares, they're listed on the exchange, gold ETFs would also be. There is a need to maintain the trading account, fund it regularly. If you want to make monthly investment, you have to do that process every month. So again, it boils down to what's the investor preference. If you take an example in terms of costs, if you say, let's say if I would just take, for example, an SBI gold ETF versus the gold fund, there would be like a 0.1% or a 10 basis points difference between buying the ETF as an investor or buying the gold fund. Now, if I feel that, my time and expertise is not really in this, or, anyways, I'm going to spend a lot of money in managing a trading account, managing my demat, and, even paying charges there and brokerage charges for ETFs as well. So net, if I feel as an investor that, that 10 basis points is very much justified in moving to a gold fund, I would like, prefer a gold fund. And also for the simplicity, for simplicity's sake, my vote would usually go to a mutual fund.
Okay, for simplicity's sake, and of course for kind of returns that we have been seeing, the kind of flows that we've been seeing as well. So this, of course, has seen a higher flow of SIPs as well. Shalini, thank you so much for joining us today on CNBC-TV18 and talking about a whole host of issues. Because, Pavitra, we've been talking about how international investing has changed after this tax regime that has come in, and also after the way these subscriptions have been paused, something that we highlighted earlier in the year as well. And the SIP flows, you've been telling us, at record high. So Shalini says for the matter of simplicity, she would go with mutual funds. Of course, because it allows SIPs as well versus an ETF.
That can be a huge benefit, right? For someone who doesn't want to put in that kind of lump sum money.
Exactly. So liquidity issues with ETF. But of course, that was a fair comparison and a very interesting one as well. So Shalini, thank you so much for joining us. And with that, we'll take your leave on this edition of Mutual Fund Corner today. Stay tuned for Closing Bell to take you through the last hour of trade.